Memes have won.
What did you say? They won.
They won.
The numbers are in, and the haters have gone quiet. More than half of the best performing cryptos of 2024 are meme coins. Turns out not having a sense of humor can cost you some serious gains. But how did this happen? And can crypto really carry on like this? And should we just start buying everything we see on Deck Screener? Well, if you want the answers, you'd better stay tuned. So, what is driving Memecoin outperformance? Various drivers have been suggested, from Memecoin's cult communities to their tokenization of attention. And we'll get into that a little later, but we think that Memecoins must firstly be understood in the context of the broader altcoin market. Most altcoins have severely underperformed BTC this year, and one of the reasons is market saturation. The supply of new cryptos has exploded, while demand has not meaningfully increased. In a saturated market, you might expect the biggest and best funded new altcoin projects to perform the best. But this is not the case, and blockbuster altcoin launches on top exchanges have become deeply unpopular in parts of the crypto community. This is because of the high FDV, low float meta, which is a major theme of the current crypto cycle. We broke this down in a video earlier this year, and if you haven't seen it yet, you might want to hit pause and check it out to get up to speed. But here's the short version. Big-name altcoins have become notorious for launching at sky-high valuations and releasing only a small portion of their token supply onto the public market. Meanwhile, VCs and other project insiders hoard large allocations that they acquired on the cheap. And this means that when the projects do launch, there is little potential for upside. And many in the community consider this to be a predatory model of tokenomics, and the last 6 months have shown us what the market thinks of cryptos like these. After listing, they can go down only for months on end. Buyers are totally outgunned by sellers, and the general feeling is that anyone buying on the open market is just prey for investors to dump their bags on. But now, retail investors are catching on, and they're sick of it. And so here we have a push factor causing market participants to be repelled by these quote-unquote serious altcoin projects. Now, if you watched our video about this, you may remember an important counter-argument. And this is that the crypto allocated to VCs and other project insiders is subject to publicly known vesting schedules. This means that their crypto is locked and can't be sold on the open market for months or even years after it is listed on exchanges. As such, if you see one of these new altcoins dumping for months on end, you might think it is because insiders are selling. But this is a myth. Their tokens are locked, so they couldn't sell even if they wanted to. Or so we thought. Unfortunately, it turns out that insiders are able to stake their locked tokens and receive unlocked staking rewards, which they can freely sell. If you think this is against the spirit and purpose of having a vesting schedule in the first place, you'd be right. It's deceitful and makes a mockery of disclosures about tokenomics written into the project documentation. This practice was exposed by a sleuth with the Twitter handle GTX360Ti, who discovered that wallets controlled by the VC firm Polychain Capital sold 82 million worth of TIA before a single token of their TIA allocation was even unlocked. The Celestia team appears to be even worse. According to the Celestia tokenomics documentation, TIA held in Genesis wallets belonging to the project's initial core contributors are subject to vesting until 2026. However, the same sleuth found that these wallets have sold 109 million in TIA since Genesis with no vesting. They allege that, quote, the tokenomics allocation breakdown in TIA docs is completely BS, and the R&D and ecosystem allocation has no vesting at all. At Genesis, only 269 million tokens were supposed to be liquid, but it appears that the actual number was more than 480 million tokens liquid at Genesis, excluding airdrop tokens. Then there was Eigenlayer, whose team appear to have been guilty of the same thing. allowing locked eigen to be staked without disclosing this in the project documentation. The team allegedly edited their documentation to reflect this only after eigen tokens had already been unlocked, so after the deed had already been done. Celestia and Eigenlayer are two of the most hyped projects this year and are supposed to become important pillars of crypto infrastructure for us all. But despite both raising more than $100 million in funding, they are still playing a rigged game of PvP against unsuspecting retail investors. It's pretty sad, really. Anyways, if you're a retail investor researching and trying to bet on projects with solid fundamentals, this kind of practice can leave you feeling jaded. Why bother with these cabal coins if insiders can dump on you even while their tokens are supposed to be locked?
We regret to announce that the Bro Crypto podcast is sponsored by the Coin Bureau Deals page. This is the place where you can find the very best deals and promos in the crypto space. From trading fee discounts of up to 60% to sign-up bonuses of up to $100,000 on some of the best crypto exchanges. You'll also find crazy discounts on hardware wallets, and you can sign up for our exclusive Coin Bureau Club there too. So, check out the Coin Bureau Deals page today. Otherwise, you'll have to keep listening to these two idiots.
Hell, that's the problem a lot of crypto bros have these days. They're inside too much, 24/7 on the
computer. Open your inside.
Yeah.
You get out. You need to get some sun. You need to get some vitamin D.
So we can see why it might be repelling people away from serious altcoin projects. Now, let's take a closer look at the pull factors that attract investors to meme coins instead. Meme coins arguably have the best product market fit in crypto. And that's because most people in crypto are here to speculate. And meme coins are the most efficient vehicle for speculation because they strip away everything else that a crypto project could purport to be or do. Meme coins promise no tech, no business, project, or product. And this may be their greatest strength. And that's because the fewer promises you make, the less room there is for disappointment. And when it comes to a crypto's valuation, generating no revenue is better than some revenue. And if your portfolio looks like a zoo, it should be pretty FUD-proof too. A similar argument was recently made by former Goldman Sachs analyst turned memecoin evangelist Murad Mammadov. Speaking at the Token 2049 conference in Singapore, he laid out his thesis for why meme coins will continue to outperform the rest of the market. In a nutshell, he says that crypto projects' ultimate product is the crypto itself. The rest is basically window dressing. According to Murad, that's because crypto is speculation first and technology second. He points out that our most used infrastructure is for speculating. Think DEXs, token launchpads, and prediction markets. And blockchains are the same. What is Solana but a cheaper and faster casino than Ethereum? If we accept that we're here to speculate, then it may be time to invert the common question, why does this tech project need a crypto? And instead ask, why does this cryptocurrency need a tech project? For speculators, the presence of any tech, product, business model, or revenue stream can only place a ceiling on the potential upside of the token. After all, the ideal vehicle for speculation is one that can't be valued. And what's harder to value than a meme? We are living in an attention economy where eyeballs, minutes, and clicks are monetized. If the value of a meme could be measured by its virality, then the theoretical upside potential for meme coins is astronomical. And tokenized virality is a dream come true for speculators. Although there's lots of shenanigans and shady business that goes on in the lower rungs of the meme coin market, those that rise to the very top and stay there tend to be the most memorable and well-liked memes. To date, Dogecoin is the best example because Doge was a popular meme turned into a crypto and not the other way around. Pepe is another example. The recent success of a meme coin based on a world-famous baby hippo is another. People love the hippo and they want to bet on its continued popularity. Dog with Hat is an interesting example of a meme coin that has achieved lasting success despite not previously existing as a meme. It's a rare case of a crypto-native meme that achieved enough virality to get recognized by the outside world. Earlier this year, Bloomberg wrote a whole article about how some hedge funds were buying Whiff. Then again, it's just a Shiba Inu dog wearing a beanie, and who can't appreciate that? By contrast, many smaller meme coins are obscure references that only connoisseurs could understand. To anyone else, they are impenetrable and not particularly funny. And this is why they usually have such a short lifespan. Nobody really cares about the meme. In this sense, meme coins are the most meritocratic part of crypto. Only those that are truly liked can make it into the top 100 and stay there. They're the antithesis of many big-name altcoins we've seen launching at valuations that don't reflect their popularity or success in any public arena. Another way of looking at meme coin success is through external factors. Now, Murad argues that meme coins offer some relief for people who feel lonely and lack a sense of belonging. As wealth inequality and the financial prospects for working people continue to worsen and the influence of religion on society wanes, these feelings contribute to a general deterioration in the mental state of society. The cult-like following attracted by some of the most popular meme coins is respite for people who want a community to belong to and something to believe in. Lawrence Lowe at the VC firm Spartan Group also made reference to religion in a recent article where he likened BTC and ETH to sacred objects. True believers, in this case Bitcoin and Ethereum maxis, express their values through practices like hodling and preaching about decentralization. These groups assemble around a shared set of values, libertarianism for example, and can uphold influential members of the community as spiritual leaders. Think Vitalik Buterin, Michael Saylor, and of course, Satoshi Nakamoto. The influence of a cult leader, willing or otherwise, can be even stronger for meme coins. Elon Musk's association with Dogecoin and the entire genre of celebrity meme coins are two different models of how this can happen. However, Lawrence is not convinced that meme coins can create long-lasting communities, and we would tend to agree, with a few exceptions of the biggest meme coins. And that's because the lifespan of any meme coin community is the lifespan of the token, and this is usually quite short. In general, there is nothing to form a community, let alone a cult around, because holders have nothing in common but the profit motive, and when you are dealing with illiquid tokens with low market caps, the PvP dynamic is very pronounced. If you have never traded microcaps before, you have to understand that the price of the meme coin can swing wildly with just a few transactions. It's dog eat dog, and the people in the meme coin Telegram group are going to dump on you if you don't dump on them first. Almost every meme coin will have its own social media pages, but most activity and engagement is fake. Fake followers, fake comments, and fake likes are rampant on crypto Twitter and Telegram in general. And so-called meme coin communities are no exception. And this leads me to the pitfalls particular to the meme coin market. It turns out that when you can get people to buy your token and promise nothing in return, scamming is like taking candy from a baby. The meme coin ideal may be the opposite of predatory altcoin launches, but in reality, the meme coin game is much dirtier. Your best case scenario would go something like this. Someone launches a token of a meme that made them laugh. It's probably not going to go anywhere, so they don't bother holding the token supply and instead do a fair launch. If other people like the meme too, they'll buy it and start talking about it. Pretty soon you have a Telegram group with real people who bought the meme coin and think it is amusing enough to grow. They talk about it on social media and buying volume steadily increases. The chart starts to pick up momentum. Traders take notice and jump in because the chart, well, it looks good. Momentum begets more momentum. Influencers take notice and start shilling the meme to their followers. Look, it's a funny meme and the chart is going up and to the right. What's not to like? If you get really lucky, a major SEX might even list your meme coin, and then who knows how high it could go. The potential for upside is limited only by how viral the meme can go. In the end, the most well-liked meme wins and lots of people get rich. Unfortunately, meme coins like this are rarer than hen's teeth. There are so many ways that meme coins can deceive you. And let's start with the basics. For information about memes trading on DEXs, traders rely on tools like DEX Screener. If you open DEX Screener, you'll see a first page filled with tokens that have lightning bolt icons next to their tickers to show that they're trending. However, these icons are bought and not earned by, actually trending. A DEX Screener charges up to $4,000 per day to have the icon displayed. Interestingly, these icons are most common on Solana meme coins and appear far less on meme coins of other blockchains. This icon doesn't guarantee that you're looking at a shady token, but you should ask yourself, do good memes need to pay to get people to look at them? Food for thought. Anyway, if you click on any of these tickers, you'll see a lot of information about the meme coin, everything from trading volume and market cap to holder count and token distribution. Unfortunately, these numbers are easily faked. The teams behind the meme coins use wash trading algorithms to generate tens of thousands of transactions from as many wallets amounting to millions of dollars in trading volume. The numbers make it look as though there is a huge amount of interest in the meme coin even very shortly after it has launched. If it wasn't clear already, the teams control the token supply. And this is done by sniping the launch, or in other words, buying up the supply at very little cost as soon as it is generated on the blockchain. Tools like Etherscan and SolScan allow anyone to see how the token supply is distributed, and you can also see this via the likes of DEX Screener. Any token whose supply is heavily concentrated in just a few addresses is a massive red flag, and every informed market participant knows this. As such, teams will distribute the supply across hundreds or thousands or even tens of thousands of wallets, all of which they control. And this gives the appearance of a high level of distribution, which is exactly what we want to see. Fortunately, Bubble Maps has a tool that allows you to detect clusters of related wallets. This can reveal tokens distributed across many wallets may be controlled by a small number of insiders. So, for example, when XCon, Suzu, and current fugitive Kyle Davies launched a meme coin named after their failed hedge fund, the community was quick to notice that 80% of the supply was controlled by one cluster of related wallets. Unfortunately, you can easily avoid detection by Bubble Maps if you care to do so. Now, you may be thinking, thousands of wallets, tens of thousands of transactions, how is that even possible? Well, very easy actually. Recently, a Twitter user with the handle @TheSmartApe revealed a powerful tool that enables Solana developers to create, distribute, wash trade, and rug tokens on Solana, all from within the command line interface. Developers can instantly generate as many wallets as they want and fund them from various addresses, making it impossible to link them together on Bubble Maps. Then the wash trading begins, creating fake volume and giving the wallet some semblance of realism. The token is then launched on pump.fun, and when it reaches a certain market cap, the tool allows them to sell everything from every wallet with a single click. The use of this tool is not detectable by any method. This is pretty unsettling, but as the Smart Ape points out, fake social media activity is much easier to detect. You can use tools like TweetScout for this, but even a cursory glance at the vibe check for their Twitter and Telegram activity for a meme coin can tell you if there are real people who are interested in it. Now, we don't want to put you off of meme coins. They are objectively the best performing cryptos of the entire year, and there's no sign this is going to change. If you shun them, fair enough, but you might be missing out on some of the best returns around. However, we do want to urge you to exercise extreme caution and suspicion when dealing with meme coins, especially those whose market cap is below $100 million or so. That's not to say that meme coins above this mark are all safe, because that is not true. But the vast majority of rugs, scams, and otherwise shady tokens will never reach this mark. Now, if you're above $1 billion in market cap, you're in the blue chip meme territory, and it's probably a well-liked meme that is not going to scam you. Probably. If you take one thing away from this video, please let it be to DYOR. It's funny to talk about researching memes, But these are the highest risk and highest reward cryptos out there. There may not be a white paper or GitHub to inspect, but you absolutely must investigate token distribution, trading volume, and social activity before determining if you're looking at a meme or a mirage. Good luck, and try not to get rugged. Alright folks, we're gonna leave it there. I would like to ask you to shill your favorite meme in the comments, but I'm sure you're way ahead of me. If you got something out of the video today, drop us a like and consider subscribing and pinging the notification bell as well to make sure you get our next upload. As always, thank you very much for watching, and I'll see you next time. This is Nick, signing off.